Hello there everyone, today's video we're going to talk about some of the proposals, the tax changes that may come in October, the upcoming budget that everyone is talking about. So, this tends to be the way the Treasury leaks things, leaks ideas. These aren't set in stone, these are things that have been talked about. They get deliberately leaked and the government tries to suss out the mood music in the country to see which ones with these people will kick off, others may be more affable to. It was interesting, I was watching something the other day and one of the commentators, the political commentators, said, look, this has been going on for decades. Even then, back in the 80s and 90s, governments used to do this. They used to release things that they were thinking about, get a feel for what people thought, and then come up with something, rather than go after something without trialing it and then U-turning, which obviously happens as well. I mean, look at the inheritance tax on the farmers last year. But by and large, they do like to sort of just leak a few things just to test the waters. So what are we expecting in this budget then? Who knows really what's going to happen? But I thought I'd just do a video on some of these things that have gotten out into the public domain. Let's just talk through, see what it would mean if indeed these things did turn into reality and we're in that budget. So, without further ado, replacing SDLT. Now, this is quite an interesting one. So, there's a guy who was part of a right-wing think tank, and he had this idea to say, look, get rid of SDLT. All the young people today can't get on the housing market. It's too expensive, having to shell out 5, 10, 20 grand, whatever it is. Get rid of it. Instead, have a flat property tax each year. So, for example, pay 500 quid a year in lieu of SDLT. So if you're a young couple getting on the housing market for the first time and someone says to you, look, you can either pay 10 grand right now, as the rules are, SDLT, or we're going to get rid of that and you're going to pay 500 quid a year for the next so many years. And I think a lot of people think, actually, yeah, I'd rather do the latter, so I don't have to fork out a chunk of change. And apparently, doing the rounds, that the Labour government got wind of this right-wing think tank proposal and said, okay, yeah, there could be some mileage in that. Get rid of SDLT and replace it with an annual property tax. Now, this is separate to council tax, which again is a property tax. This is a replacement for SDLT. So, an interesting one. And I think if that came in, that would appeal, I'm sure, to a lot of people who don't have to find that large, often very large, chunk of change to get on the housing market in addition to their deposit and their mortgage, the SDLT, which kills them. So, what else was leaked, mooted, released, whatever? CGT on sale. CGT, it's the one last great tax-free thing that we have in this country that we've had for decades, forever, since CGT came in. 1964, I think it was, and Harold Wilson's government when CGT first came in. In fact, I know it was. Anyway, so that's 60 odd years. But all that time, when you sell your main residence, no tax. That's how it's been. People expect that you accrue capital wealth and upsize and go on, or even downsize. But the point is, there's no capital gains tax when you sell your main property. It's been sacrosanct, shrined in British psyche for decades. So God forbid anyone should come in and say, oh, well, we're going to hit you for a bit of capital gains tax. Could that really happen? Well, again, what's been mooted and what's been doing the rumour mill in the press is, yes, it could come in, but only on the wealthy. So what the hell does that mean? Well, properties with a value of more than 1.5 million. Okay, so you sell your property and you would then pay some capital gains tax on the excess in above 1.5 million. So I don't know, let's say you sold your property for 2 million, so they'd come after you for capital gains tax on 500,000, i.e. the excess between 1.5 million and 2 million. but that's all speculation. They could even say, well, look, if you're going to sell something for more than $1.5 million, we're going to hit you for capital gains tax on the whole lot. I cannot think that's going to come in the whole lot bit. But maybe on something in excess of a threshold, whether it be 1.5 or 2 or whatever, that's what's being talked about. So God forbid that happens, because like I said, it's sacrosanct in the UK psyche. Man's home is his castle. You can't tax capital gains. Just because it's never happened doesn't mean it's always going to be that way. So watch out for that one. Capital gains tax on selling main residence above a certain threshold. What have I got in at number 3? SDLT. Coming back to SDLT. So the first one was no SDLT, instead annual tax. What about replacing, or what about rather switching round SDLT so it's not a burden of the buyer, but it goes to the seller? And I've heard this before, and people say, well, yeah, this kind of makes sense because they're the ones flush with cash. You've sold your property, you got the cash, and at that point, pay SDLT. It's always historically we thought of it as a buyer's thing, and it's been around for even longer than capital gains tax, been around for a couple of 100 years as stamp duty. So, but yeah, in theory, why not switch it around? Again, help the kids get on the property ladder. No SDLT. The seller is flush with cash. They then pay the SDLT. A little bit harsh, of course, if you're one of those people that obviously before the change you paid SDLT on the purchase and then you're going to pay it again on the sale. But I can see the rhetoric, the rationale for that. You're designing a tax system from scratch. You say, what would we do? Well, yeah, we'd put the burden on this lot instead of this lot. The only problem is this: the transition from one to the other, someone's going to get clobbered. And can you imagine as well, if that did come in, SDLT on the seller and the capital gains tax on gains above a certain threshold, you'd have a double whammy for sellers. Got to shell out your capital gain and your SDLT. So, watch this space. And my 4th entry on the proposed property tax changes in the upcoming budget is the most recent one. This is end of August 2025, only a few days ago. This one was leaked. Proposed national insurance on landlords' profits. So, in the national insurance world, we have certain terms and jargons. The main two being what we called earned income and unearned income. And basically, national insurance applies to earned income, not to unearned income. So what the hell's that? Well, earned income is if you've got a job, you've got a salary, you're earning a wage, or you're self-employed, you're a plumber, you're a joiner, you're manufacturing your widgets, but as a self-employed person, that is earned income, and national insurance applies to that. Okay? So what the hell is unearned income? Well, unearned income is rental profits. You may think, well, I'm earning a living off this, or I'm earning a few quid. Technically, you're not, as far as national insurance jargon is concerned. That's unearned income. Rental profits and dividend income, investment returns, whether it's on the stock market or your own company, you're paying yourself a dividend as an owner-manager. That is unearned income, no national insurance. So certain income streams, the earned income, NI. Now, if you're an employee, you pay class 1. If you're self-employed, you pay class 4. You used to pay class 2 and class 4. Class 2's got abolished last year, so now you pay class 4. So what these proposals are saying is actually, why don't we slap on some national insurance on stuff that was hitherto deemed unearned income and we didn't used to hit for NI, particularly property profits. Hopefully, I could do another video on dividends. This is all property related, but God forbid they'd put NI on dividends. But just sticking with the property theme, NI on rental profits. So again, who's going to suffer from this? If you are a landlord, you've got buy-to-let property or properties, then you pay an income tax. So you're self-employed, but you're not paying national insurance. But if you did, how would they do it? Well, presumably they're not going to do class 1s like they do for employees. They'd hit you for class fours, just like you're self-employed, you have a trade. It's the same, the same entity that you're operating your business through. So if they put class 4 national insurance on rental profits, what does that mean? Well, class 4s kick in on business profits, which this would now fall under, above the personal allowance, 12,570, up to the basic rate threshold, 50,270. So that is about 37 grand, taxed at 6% is the current rate. So 37 grand at 6%. If you had rental profits in excess of 50 grand, 2% on that. So 6% on a 37 grand tranche plus 2% on an unlimited amount after that. That is what they're proposing to hit landlords with. What about if you have your property portfolio in a limited company? How will that work? Will this be just for unincorporated landlords, i.e. those who don't have a corporate wrapper with their properties in? Who knows? Will they slap national insurance on rental profits in a limited company? And if so, how's that going to work? How's that going to work? Will it be all of a sudden employers class 1 national insurance, class 1A? What would it be? What would be the type of national insurance on rental profits in a limited company? So who knows? Who knows? So there you have it, folks. That is an overview of 4 pronouncements, leaks, mood music, feel out the populace, see what they think, recent thoughts by the government, the Labour government, on what's going to come in from this budget coming in autumn 2025. Most of this stuff, in my opinion, pretty bad. I'm not a big fan of any of it. To be fair, that one, I think, replacing the SDLT with an annual tax, I can get that. I do also get the swap round from the buyer to the seller, but it's the transition. How's it going to work when you've got somebody change? It's like changing a one-way system. All of a sudden, you've got someone who's going to be hit who's paid it at the start, and they're going to pay it at the end. So I think that's not too bad. I can get where they're coming from on that one. Not a fan of CGT on sale or on national insurance on rental profits. So there you go. But let me know what you think. Drop your thoughts in the comments below. If you like this video, please do subscribe. And as always, I'll see you soon.